Wolf waves are a fight towards an equilibrium price and one of the most reliable predictive reversal patterns. And quote. Bill Wolf. The indicator will automatically detect every single valid wolf wave pattern on every time frame on every currency pair. The indicator does all the hard work, so you don't have to. The new generation of indicators. The Wolf Wave Scanner displays all detected wolf waves on one convenient panel. You no longer need to manually scan every pair and time frame. The scanner does all the hard work for you. With just one look at the panel, you'll instantly know which pattern has just formed on every pair and every time frame auto scan. Up to 28 currency pairs and up to 9 time frames for each currency pair. Scan method: scan with fractals or with zigzag, your choice. Bars filter, from signal or from point 1 to point 3. Line break time frame filter. Choose your time frames to scan directly from the panel. Watch list, save your favorite results to the watch list so you can monitor them at any time. Mini chart. Check the signals or your favorites on the mini chart so you don't have to leave your chart. You can click on the symbol you want, and the indicator will switch your current chart with the chart of the symbol you clicked on, or you can set that the indicator will open that symbol in a new chart. We will not go in depth of the theory itself to uncover every detail and concept the author developed, as it would take us through a long journey. Instead, we will provide a general overview of the system to make it clearer for our readers how they will need to apply the theoretical notions, since it will help them choose the proper EU charting software programs. Hence, you will be acquainted with the core foundations of EU theory, but if you would like to become an expert in the matter, it is better to read the original theory itself and modern updates such as our own SWOT methodology and trading tools built into a handy Elliott Wave trading system, as well as a comprehensive guide: the relationships between waves and Fibonacci levels. Motive wave patterns. Elliott Waves pattern comprises 2 major types of waves. The first one is the motive wave, which consists of 5 smaller waves. 3 of them are impulse waves, waves 1, 3, and 5, and 2 are diagonal waves, waves 2 and 4. The pattern of the motive wave can be an uptrend or downtrend. The first wave of the uptrend pattern contains a weak rally of a very tiny amount of traders participating. It is followed by wave 2, which has a vicious sell-off but still allows the starting of another rally. Wave 3. Wave 3 starts slow, but as soon as it breaks the high point of wave 1, the rally starts to pick up the momentum. It is the most active stage at which market participants are aggressively adding the positions. Wave 4 is a period of profit taking resulting in a pulled back price, but way more orderly than in the case of wave 2. For the last wave, only a few traders who have missed the previous moves are entering the market to start another rally. But the number of participants is not sufficient to boost it up and hence tops out eventually. The motive wave downtrend features a similar dynamic but mainly in an opposite direction. It all starts with a wave 1 with a weak sell-off involving a limited number of market participants. In wave 2, the rally gets higher but still allows a turnaround to start with another round of sell-off. The third wave involves the most active sell-off, which breaks the law of wave 1 and sets the pick momentum with participants opening short positions or others exiting the long positions. The fourth wave is a profit-taking move which causes a serious pullback in asset prices. Finally, at the stage of wave 5, a few short sellers will enter the market to start another sell-off. However, it will not be enough to sustain another rally and will eventually bottom out. Corrective wave patterns. Corrective waves are a bit more complex than motive waves. Hence, it is crucial that a trader uses a high-quality Elliott Wave charting platform not to get confused. In general, the corrective wave pattern follows the 5 motive waves that we described above. It consists of a 3-wave correction, or otherwise known as the ABC corrective pattern, zigzag correction. Similar to the motive wave patterns, we have uptrend and downtrend corrective wave patterns with similar characteristics in opposite directions, and a broader uptrend corrective wave pattern. The first wave or wave features a small drop in the price as participants bank their profits and start exiting the market. Since the trend still remains up, some traders will enter the market and will initiate the beginning of the second wave, wave B, but as the first wave decline is obvious to buyers, many of them will decide to exit the positions, resulting at the beginning of wave C. At this point, quite a few short sellers are attracted to join in pushing the market further down. And a broader downtrend corrective wave pattern. The first wave consists of the participants who begin to claim their profits and exit their short trade positions. Downtrend attracts few sellers to enter the market at the beginning of the second wave, or wave B, initiating a weak rally move. As the third wave, wave C, begins, those sellers observing an increasing move in wave A will quickly exit the market, prompting other buyers to join in and push the market higher. How to use Elliott Wave in trading. We have described the wave behavior in the previous paragraph using Elliott Wave theory and observed how market participants initiate various stages of the wave patterns. But how do you interpret those waves, and how do you identify when it is the right time to enter or exit the market? The key idea in Elliott Wave trading strategy is to understand the psychology behind the market and quickly recognize the optimistic and pessimistic swings. In other words, we need to know when the markets are becoming bullish and when they will be bearish. The market in a bullish state consists of investors with a strong appetite for placing more trades and going long. But this state slowly fades away as the seller's remorse sets in and investors